welcome to Looking at the Markets with David Modell. I want to tell you about a gap and fill or gap and drop type of strategy. This would be most likely for day trading or intraday trading. And before we get started, I just want to mention that I do offer coaching for traders and investors if you're a beginner or if you're intermediate or more advanced. I do offer coaching. You can email me at davidmodell@gmail.com, and that's in the description below this video. So I should also mention that this strategy does not work perfectly. It does not work 100% of the time. And before you use any strategy, please make sure that you test it out with virtual or demo trading. All right, test it out with no money risked. And make sure it works. Back test it, forward test it, do whatever you have to do, make your own decisions, do your own due diligence. All right. So, but this was a live trade that I made and it worked out perfectly. And I wanted to show you the 1 minute candlestick chart for Walmart, WMT. This is on tradingview.com. Want to give them credit for their charts. And see, there was a gap up, a pretty decent sized gap up. And you could almost predict it was going to happen, almost, because look at what happened on Friday, the previous trading day. There was at the last minute, boom, right? There was this big green candle on the 1 minute chart. And I do recommend using the 1 minute candlesticks for this system or this strategy. Reason being that if you use, let's say, 5 minute candles, you're only going to get one candle every 5 minutes. You know, it's going to take 5 minutes for the candle to form. A lot can happen within that time for a gap and drop strategy. I mean, look how fast this gap happened and the drop, okay? So, I mean, the gap is overnight, granted, but still, you know, the drop, it happened rather, boom, quickly, right? Okay, so the 5 minute candles are probably not going to give you enough detail per candle to really implement this effectively and to get that good timing in there. All right, and this is only something you want to do if you can really monitor the chart. Okay, if you can really look at the screen pretty constantly. All right, this is not something where you're going to wake up and then go eat some cereal and then come back 10 or 15 minutes later and see what happened. All right, so why did I choose this one to trade? Well, again, I could almost predict it based on Friday's, you know, huge green candle at the end there. It's like, oh, okay, all right, there could be a gap up on Monday, the next trading day. It happened as I predicted. And the next thing you know, well, first of all, look at that first candle, okay? That is called a shooting star. I don't know if you can see, it's hard to see, but you know, that first candle there, small red body there, and then it had that wick or shadow at the top there, okay? That's like, uh-oh, okay, that's not good, that's not good. And then a couple candles later, big red candle, it's like, oh boy, all right, that's not a good sign, okay? I See a Bad Moon Rising is an old song, and that's kind of what's going on there, all right? So even if you missed the exact moment here, a couple of candles later, it's like, oh, I got some rough candle shapes there for the bullish case, all right? This is a bearish case right here, all right? But you know what you could do is just take it in the beginning or upon that first candle, depending on the shape of the candle. Also, depending on the volume. I mean, in the very opening, look at the size. Look at the small size of that volume bar. I mean, that's just pathetic. Okay, that's nothing. Compare that to the volume of the close here on Friday, on the previous trading day. Big volume for that minute. Okay, but when it's a gap up and the volume is low, that's a bearish sign. That's not good for the bulls, right? Okay, so I already see two signs. First, the gap, well, several signs. First, the gap up is pretty big. And when you get a really big gap up, but not super big, okay? If it's super, super big, like imagine if the gap up were, I don't know, 10%, all right, which for Walmart is huge. That's rare, all right? You're not going to see that very often. Then you may just want to get out of the way when it's super huge. But when it's big, but just, you know, moderately big, all right? Like this one, for example, that's like, oh, I might want to fade that gap. I might want to bet it's going to go in the opposite direction. And you could work in both ways too. Okay, this might be for a short position. Be careful with shorting. Please, okay, shorting is only for advanced traders. Mostly only for advanced traders with a lot of capital, because remember, with shorting stocks or whatever it is, you can lose more money than you have in your account. Yes, it is possible. I have seen it. All right, so be aware of that. You don't want to lose everything and then owe your broker some money. All right, so one thing you can do is use a stop loss. All right, and we'll talk about that in a moment. But you may decide, you know what, I'm only going to use a long only strategy. All right, I'm not going to short, and that's fine too, because it is very risky. Be aware of the risks with shorting. Okay, and you could do the opposite. You can, if there's a gap down in the morning, and then you believe it's going to turn around and fill the gap, as they say, go all the way back up to where it opened. That's a long only strategy if you choose only to do that, and that's fine as well. But let's say you decide to take the short strategy, all right? Based on what? Well, the gap is big, but not too big, okay? Because if it's a huge gap, there could be some serious momentum behind it. And oftentimes that just keeps going as the FOMO, or fear of missing out crowd, jumps in after that gap, after that huge gap, all right? But if it's a big but moderately big gap, that's one criterion you can look for. The second is it's on low volume. All right, that means there's not a lot of conviction, not a lot of participation behind that gap. All right. The third is look at the candle shape. When you start seeing, maybe a shooting star type of candle, that can help to confirm it for you, or some other, not so positive candle shape. Maybe a doji candle, which indicates indecision and a possible turnaround in the works, okay? Or a big red one can do it as well, because it's like, oh, okay, you know what, that gap could easily get filled now, which it certainly did here. Does not work. This does not work 100% of the time, but it certainly worked here, okay? Money was made for sure, all right? So another thing to look for is a lot of people only look at the chart on YouTube. A lot of the so-called YouTube self-appointed gurus are only looking at the chart, and they never ever talk about, looking at the fundamentals, looking at the news, looking at what's going on with the company. I wonder if they even know what they're trading sometimes, some of these gurus. I recommend also at least glance at the headlines, see what's going on. And I looked at Walmart and I said, was there a reason for this sizable gap up here in the morning? No. I mean, there might have been a reason that I missed. It's always possible, but I looked through the headlines. I took a quick glance at the news items going on, not the opinions. Okay, I wasn't looking for what people thought was going to happen. I was looking for what actually happened in reality, some actual factual news item. And there wasn't anything particular to Walmart. Yeah, the overall stock market was up, but that's not Walmart in particular. That's called a rising tide lifts all boats, as they say, right? Okay, that was just a rising tide in the market lifting Walmart, but nothing in Walmart happened in particular that I saw, at least. Again, I could always miss something. I'm only human. So I want you to check the news, all right? If there's some really great news in the stock, then you may want to stay out of the way and let it keep going. Let it keep going up if it wants to. Maybe stay out of that trade, all right? But if there's no particular catalyst, as they say, or reason that something happened in the actual news items, the actual ones, then that could be another criterion for, hey, I want to take this trade. Or if it gaps down, a lot, but not too much, right? If it's like a 10% or more kind of gap down or whatever, big percent, you may want to stay out of the way. But if it gaps down a lot, and then, you look at the other criteria, you look for the low volume, you look for the candle shape, maybe you look for a hammer candle, which is like the opposite of the shooting star, okay? Things like that, all right? And then you want to glance at the news, the actual factual news. And if there's no catalyst for a big gap up, and make sure it's not too big, but if there's no actual catalyst, you're like, okay, maybe you're thinking, hey, this could fade. This could fill. This gap could fill. By fill, I mean come back to the open. All right, it could come, the opens here. It could come right back, which Walmart did and more. Okay, that was a profitable trade, and I want you to be profitable. Okay, so if you like this, please give it a thumbs up on YouTube and subscribe if you haven't done that already, so you can get updates on my latest videos. Leave a comment if you like this strategy, and especially if you tested it out, because I want you to test it out with demo trading, virtual trading, before you actually do it with real money. And if you have real money, and you're using it, be really cautious. I promised I would talk about a stop loss. Okay, some people with this type of strategy would recommend a stop loss half the size of the gap. That's one way to go, okay? Half the size of the gap. So if the gap was from here to here, you wanna measure that, all right? You wanna measure the dollar amount and then divide that by half and add that, okay? If it's a short strategy where you thought it went up too much and it's gonna fill back down, okay? Half of this distance, okay? That is a subtraction problem. Okay, so this number minus that number, and then divide by 2. All right, half of that, and then add that to the price here. So it'll be like up here somewhere. You can't really see it, but it will be up somewhere, up at the top. All right, and then you could short it, and if it goes that distance up and you get stopped out, you get stopped out. All right, so that could be your stop loss, half of the distance of the gap. That's one way to do it. If you want to be a little more conservative, meaning just safety minded, it could be a third of the distance of the gap. All right, that could be your stop loss, but be aware that you're going to get stopped out a lot of the time if you make the stop loss too tight. If you make it too small, all right? So 50% of the distance, you have to be willing to lose that amount as well. Be careful. Please be careful, all right? So if you're interested in the coaching, I do offer that, davidmodell@gmail.com. I do help a lot of people with trading and investing, whether you're a beginner, intermediate, or advanced. So thanks a lot for watching and listening. Be careful. Respect your stop losses. Be safe out there. Thanks a lot. Have a good day. Bye-bye.